So you are on a show called Crypto World, which is CNBC's new daily digital show dedicated to crypto coverage. What is mainstream media? Like, what are we doing right? What are we doing wrong? What do we need to do more of?
That's a very loaded question. Look, I think that the mainstream media in general, what they're trying to do is they're trying to learn alongside entrepreneurs and investors, and also regulators and politicians, et cetera. Everyone's trying to figure this industry out at the same time. And so to basically learn while simultaneously turning around and then sharing that information with their audience, really hard task to do. So I think first off, like, what is being asked of mainstream media is a difficult thing. In terms of what's going well, I think the more that they kind of put themselves into the community, the more educated they'll be. And that's the hardest part, is when something isn't an industry that's been around for 50 years and there's experts and people understand how it works, you have to learn. And the best way to learn is go to the people in the market and say, what is going on? Rather than the kind of pontification or the opinion pieces of like, well, I spent 5 minutes on Coinbase and I think that Dogecoin's going to the moon or is going to zero. Instead, starting with, okay, let me go talk to the investors that people seem to respect. Let me go talk to the entrepreneurs. What do you think? How do you see this? So I think that's what's going well. What's not going well is I think that the mainstream media in general is pretty skeptical of any sort of corrections or pushback from the community. They feel like, oh, of course you guys would think that. And so that's true of every industry. It's not just crypto. But I do think that in an industry like this, when somebody writes something and they get corrections, they get some sort of education, and people say, hey, look, it's not actually how it works this other way. I think being more open-minded is frankly better. And that's true also of people in the Bitcoin community as entrepreneurs, investors. It's true of politicians, it's true of regulators, and it's true of the media. And so you have to remember, when things are evolving, if you just go into it with this rigid mindset, you're just naturally going to miss developments. And so the more open your mind and the more kind of intellectually curious you are, the better off I think you are in terms of knowledge. The better off you are in terms of knowledge, I think the better you can do your job. So
obviously you're hugely involved in this space. You are, yourself a practitioner, but you're also speaking to the biggest names in this industry from every possible perspective, macroeconomics to mining. And I wonder, what is nobody talking about that they really should be right now in terms of media?
Yeah. I don't know if there's anything that people aren't talking about. Maybe it's just like the level of importance they're putting on it. And so take El Salvador, for example. It seems like people are like, oh yeah, that's kind of a cute experiment. They only have 6.5 million people. But what's unique about it isn't just that El Salvador made it legal tender. There's debate in the Bitcoin community whether that's a good thing or a bad thing. It's not that they built out the ATM network or they've got the volcano bonds or any of that stuff. It's actually that when they started to report their GDP and their tourism, they've exploded. It's double-digit growth both in GDP and in tourism. And so what I think you're starting to see is that politicians in the United States are waking up to this as well, of like, there is a constituency that holds these assets, that is very interested in these ideas and these ethos, and if we do not understand them, then naturally what is likely to happen is that they're going to go elsewhere. They're going to either vote me out of office, they'll vote for somebody else, or they will literally vote with their feet in their wallet and they'll move elsewhere. And so I think that that's like a big piece of this, is just how important this community has become to society. Whether people like it or not, it's a pretty undisputable fact.
I definitely want to talk more about politics. Finish your statement.
Oh, and I was going to say, and then another aspect that I think is really important is mining. And I think there's a lot of folks around the world that look at mining and all they have ever heard from a headline standpoint is energy consumption. But I always go and I say, well, there's things like refrigeration. Consume a lot of hell of energy. No one is saying we shouldn't have refrigeration, right? Same thing, and I've had people come on the podcast and explain, another idea could be like clothes dryers. There is an alternative, right? With refrigeration, there's not really an alternative. But with a clothes dryer, you could just hang up the clothes and let them air dry. Like, that would get to the same result. But you still choose to turn on that dryer because it's convenience. And we have deemed that the energy consumption from clothes dryers is worth what the end result is. And so mining is very similar, except for it's not drying your clothes. If you think about it in terms of it is protecting the purchasing power of over 150 million people around the world in a time where there's undisciplined monetary and fiscal policy, all of a sudden, it's probably one of the most humanitarian things that we can do. And when you start to look at it from that perspective, I personally think Bitcoin will do more for the world than all philanthropy combined, because it is a first principles solution. Most solutions in the philanthropic world, they end up being band-aids, or they end up being reactive. So something happens, and what do people say? Let's go give money here, it makes me feel good, etc. But it doesn't actually solve the core problem. It just simply tries to address the impact or the end result of that problem. When you actually look at money and you say, can we fix the fact that there is 45% of Americans with no investable assets? Over the last 2 years, 45% of Americans are in a worse financial position than they were 2 years ago. Why is that? It's because at the same time that we try to mitigate short-term pain for those that are in the middle class and above, we've actually punished the bottom 45%. And so you get in this weird world of like, how do you solve that problem? There's no incentives for politicians, central bankers, people in the private sector to solve that problem. Ultimately, what you need is you need a piece of technology where the end user, the people in that bottom 45% are incentivized to adopt it and allow the technology to solve the problem. So this whole idea of like fix the money, fix the world, I think gets lost because there's a price. And the price attached to this asset draws attention. It's super volatile. People love to write about it. But if you just say, put the price aside for a second, what is the potential impact of this? There's not very many technologies, right? And I always say, like, this isn't a new phenomenon. If you think of Uber, everyone likes to write about Uber's out of control, Uber's breaking laws, all this stuff. Uber probably has done more to save lives than all of the politicians in the United States over the last decade because it took drunk drivers off the road. And so when you think of that, like, is Uber a healthcare company? Not really. But it had a pretty big health impact to public health and safety in a way that if people wrote that story, there'd be a lot more people looking at that company positively versus the negative that kind of got drawn into the media. So I think we just got to think about like, what is this technology, what's the impact? And then ultimately present both cases. Like present the, hey, there's wild volatility in price, and present here's the potential humanitarian component to it, and then let people make their own decision.
On the utility of mining and how people are perhaps not seeing the full scope of what's being offered, and I mean, there's so much to say on it because there's also like the environmental benefits when you're able to co-locate with renewables and provide a financial incentive. You know, flare gas is getting rid of a lot of emissions issues. So that's a different side of it. But you're talking about the actual utility and what mining has to offer. And New York right now is again considering legislation to ban the entire practice in the state. And the question on some people's minds is, if they are successful in doing that, is there a domino effect? And what does that mean? Because to my knowledge, I think this would be the first outright ban of Bitcoin. Like Washington, certain localities were legislating against it. But what's your take on what's happening?
They should do it. And they're going to realize exactly what China realized, is when you ban it, all of a sudden they have kind of seller's remorse, right? Which is, oh, maybe we shouldn't have done that. That was probably a bad decision. And so if New York, right, which ultimately already did something similar to this with the bit license, it's kind of an indirect or a light, a soft power type move, which it has kept a ton of businesses out. Well, guess what? Those businesses went elsewhere, and they didn't slow down the industry. In fact, what they ended up doing is they just handed the profits, the economic prosperity, the jobs, etc., to other states. So in some way, the bit license was a really stupid thing that New York did. It was good intention. They were trying to do the right thing, but the execution of it was really bad. I don't think anybody wakes up anywhere in the world, whether in the Bitcoin community or elsewhere, and says, I want to hurt the environment today. I want to destroy the environment, right? No, everyone says, what are the trade-offs here? What energy do we need to consume, and what is the potential benefit? I think the better thing is, rather than look at this in a binary ban, not ban, instead, if you want to create some sort of regulation, do it from a thoughtful perspective, hand in hand with industry, and say, what are our goals? What would we be comfortable with? Don't ban it. Instead, say, hey, this is the type of power you need to use. There's certain percentages, whatever the rules they want to create. I don't expect everyone just to say, hey, free markets will kind of prevail. That's my personal view. But if they want to have rules, don't just jump to the extreme. Because when you jump to the extreme, you usually get extreme results. And if it ends up being a binary, this is good, this is bad, history tells us so far that that's probably not going to be a good thing for New York.
Last question on mining. The whole point of, like to the fundamental tenets, as I understand them, of Bitcoin, are the fact that it's, decentralized and highly secure. So in the last year, we've seen this migration of hash rate out of China. As you said, they banned the practice, and even though there were still some underground operations, largely that hash rate showed back up in the US, and I've been speaking to a lot of those miners across the country. But is it a bad thing if you see this concentration go from largely China to then largely the US? Like, is it ever going to be possible to have more of a spread of
I think you definitely want to have decentralization. Like, that's a key tenet of Bitcoin, very important. It's true of the holder base, that's true of the mining capacity, and many other aspects of it. In terms of if you are going to have any degree of concentration, and there's no kind of line in the sand of what that definition means. Is concentration 10%? Is it 50%? Right? How do you think about that? But if you're going to have any concentration, I think you want it to be in places with clear regulation. And so you could argue that the United States has better regulation and kind of more confidence in the rule of law than in a place like China. At the same time, there's a lot of people who would argue that the United States hasn't done a great job of creating what that regulatory framework looks like, and so there's still uncertainty. And so I think what we need to do is we need to address both problems. We want to have as much distribution as possible across the globe, and so that now puts the onus on people outside of the United States to stand up hash rate. There's a bunch of things that go into that. Can they get the machines? Can they get low cost of power? Do they have the political and social appetite or will to actually go ahead and do this in a certain country? All of that. But I think it's an important body of work, and we need the rest of the community internationally to step up and start to address that. On top of that, we also need here in the United States, we need better regulatory clarity. And I don't think that the Bitcoin community maybe puts as much emphasis on getting regulatory clarity doesn't mean we get the rules that we want. Right? I think if you looked at the spectrum, we're like, man, this would be the ideal scenario. Then there's like a scenario where like, okay, we could live with that. And then there's like a doomsday scenario. And there's some stuff in between, but like that's like the three buckets. And most people say, oh, we want regulatory clarity, but in their head, what they're really saying is, we want the rules we want. And so you gotta be careful, right? Like asking for regulatory clarity does not mean you get the rules you want. It simply means that there are clear rules. And this is true in legacy finance as well. There's plenty of rules that people are like, man, it's pretty stupid. Accredited laws in terms of investors in certain types of investment opportunities, right? Sounds kind of stupid, good idea from what they were trying to accomplish, execution probably pretty poor. And so I think we have to be willing to have that be an outcome here, is regulatory clarity is more important than having the perfect rules, because what it'll do is it'll unlock tons of capital, and it'll give confidence not only to retail, it'll give confidence to entrepreneurs, to investors, and I think to politicians. There's a lot of politicians right now that are saying, man, I think that this is a really good thing, but it's only the ones who have the courage and the conviction that are willing to kind of put their neck out there and say, hey, I'm willing to put my stamp of approval on this as a core issue that I want to push forward in the Senate or in Congress. There's a lot of people behind closed doors that are like, yeah, I'm probably pretty cool with this, but I'm not going to say it publicly yet.
Yeah.
And so when you get regulatory clarity, then all of a sudden, just like we saw on Wall Street with the institutional adoption, it went from a contrarian trade to a consensus trade. Politicians are about to kind of go through over the next 24 months. It was a contrarian idea when Senator Lummis and Tom Emmer, Davidson, and all these folks.
Yeah.
That was a contrarian idea, right? Ted Cruz comes out and people are like, whoa, that's crazy. Eventually it's going to be, you have to be pro-Bitcoin if you want to be a politician in the United States, if you want to keep your seat, or guess what's going to happen is one of the most digitally engaged, wealthiest, most kind of long participation in front of them in the political arena. These are young people with money who care about their society and the communities they live in. They will vote you out. And when politicians start to realize that, I think you're going to hear them change their tune. Ultimately, politicians will do what their constituents want, regardless of what we think that they're going to do. It's just what the constituents want they ultimately will do.
Yeah, and like you look at August, there was a rubber stamp $1 trillion infrastructure bill that was held up for a week and a half by a voting contingent that a lot of people didn't know existed.
The Bitcoin and crypto community didn't even have their shit together when that happened. Right? If you really think about it, we held it up for a week and a half, and it was basically some people tweeting on the internet. Like there was no coordination, there was no anything. There was like a fire drill. Everyone was like, oh, we never practiced this before. Like, just go. Everyone just make as much noise as possible. And we held it for a week and a half. If they try the nonsense again, well, guess what's going to happen? Now they're just going to get stopped. And there's not going to be this, oh, maybe in a week and a half it'll get pushed through. Instead, what you're going to get is they're going to get overwhelmed. And so I think that politicians are waking up to this. And so when that occurs, my belief is that after this next election, there'll be many, many more Bitcoiners in political seats at the state, local, or federal level. And when that occurs, now the community will still have a loud voice. But in some way, the government and the democratic process is working where we have sent somebody who has certain views on an issue that we care about to represent us in government, and they will step in and say, hey, I don't agree with this. And so now it won't be the people versus all the politicians. What you're going to get is the people plus some politicians versus the politicians who don't agree, and I think that ends up being good for Bitcoin.
I mean, you were talking about this idea of people, the politicians getting voted out if they're, definitely they're taking a negative stance, but I was talking to one political action committee, and what they're doing is raising millions and millions of dollars to support candidates who aren't even necessarily pro-Bitcoin, they just don't speak out or have any opinion on cryptocurrency, and that's like a better outcome than somebody who's actively advocating against, crypto assets. And going into the midterms, I mean, how important is it to have a stance on Bitcoin, or how big a role does Bitcoin and other cryptocurrencies, how big a role do they play?
I think that the number one issue going into the midterm elections is actually economics. Everyone wants to talk about a bunch of other things. There's really, really important other issues. But at the end of the day, what you're going to find is that the average American citizen wants to know, what is this politician going to do that has a financial impact on me? So that includes taxation, that includes crypto, that includes the Federal Reserve policies, all this stuff. And so if inflation is out of control, that has a very negative impact on people who are currently in office, specifically on the Democratic side of the aisle. If people are holding a lot of crypto, they're going to go and say, which of the politicians end up actually being pro-Bitcoin or cryptocurrencies? I want to support that person. If somebody wants to have really, really high taxes, unlikely that they're going to get a ton of support from the American people. And so I think that that's always been true to some degree. Now it's just getting magnified because we do have high inflation, because there is this whole new alternative financial system. And so at the end of the day, people like to talk about a lot of stuff on the internet, but humans are very self-absorbed. What is the impact on me? And frankly, a lot of the topics in politics don't impact me, other than the financial aspects. And that is, in some ways, it's a sad thing, it's an unfortunate thing, but I think the politicians who realize that's the core issue here, you're gonna see on both sides of the aisle, they're gonna turn real quick, and we're seeing it. We're seeing it both in elected officials, but we're also seeing it in appointed officials. Jerome Powell, Janet Yellen, they're all starting to talk about this in a different way, and I think it's because ultimately if they are abrasive to it, they're going to get slotted in with the politicians who are abrasive, and nobody wants to be unpopular. No matter what they say, they don't want to be unpopular. And so ultimately, being on the side of the internet tends to be a good thing over history. And right now, the internet is behind Bitcoin and cryptocurrencies, and so you better be pro, or they're going to meme you to death, they're going to mock you, they're going to vote you out of office, and you're basically just going to not want to go on the internet, because even if you're an older person who doesn't spend a lot of time on the internet, your children do, your grandchildren do, and what are they seeing? Like, damn, grandpa or dad or mom or grandma, they're getting memed to hell on Twitter, right? And like, sounds stupid, but like, you best believe that they see the memes, they see this stuff, they feel the impact, and nobody wants to go into work every day and all the young people in their office are like, hey, I don't know if we should say that again, like, look at this meme, right? And so ultimately, I think that you're just gonna get that feedback loop, and we will get them in the right place.
Going back to what you were saying about inflation, in the last few years, it's the first time that we've seen Bitcoin really in an inflationary context, and what have we learned? Is it a hedge against inflation, or?
Whenever this question comes up, there's three components that I think about. The first is it an inflation hedge? Is it a safe haven asset? And is it correlated or not? And I always say that the longer of a timeline you look at, the more confidence you can have in the data. So if you just look at the last day, well, maybe it looks good, maybe it doesn't, I don't know, but like, is the trend gonna continue or not? You just don't have that much data. So if you look over a really, really long time period, what you find is that Bitcoin is a non-correlated asset, that it has been a fantastic safe haven, and it has served as an inflation hedge. But the thing that people don't realize about inflation is that if you use that as kind of one aspect, investors don't wait for the inflation to show up to move their assets. They say to themselves, okay, I see what the Fed's doing, I see what the fiscal policies are, I believe inflation's gonna happen. If I think it's going to happen, whether it occurs or not, I've psychologically told myself it's gonna happen, I move my money. And I move into what I see as an inflation hedge asset. And the reason I do that is because if I'm wrong, then it's not that bad of a situation. If I'm right and inflation does occur, I better have moved my assets. I better not wait for the inflation to come. And so if you go back and you look, all through 2020, inflation was actually pretty low. And even into the beginning of 2021, we still didn't have that high of inflation. But what we did have was Paul Tudor Jones, Stanley Druckenmiller, a bunch of financial institutions, all the capital moving on chain, where people were saying, I'm going to front run the inflation. And then inflation came, and we've now had, I don't know, 8-9 months of over 5% inflation. We've got the highest inflation in 40 years. And everyone's like, well, Bitcoin isn't going to the moon. It's like, no, because people already moved their assets and they're protected from that inflation. And so in 2021, Bitcoin was up, I think it was 60-65%. Most other assets were only up 20 or 30%, which was a banner year for real estate or for the stock market, whatever. Well, Bitcoin being up so much was because people were anticipating the inflation that ultimately did come. And so now what I think the big question is what do people think will happen in the future? Mm-hmm. Do they believe inflation will continue to go higher, or do they actually think it will subside, given that there's going to be a base effect, and also you're going to get the Fed policy changes where they're going to increase interest rates? And that's like the trillion-dollar question in financial markets right now. But I do think that Bitcoin has proven to be the best inflation hedge in the world. I think that there are other inflation hedges that you could have allocated to. You could have allocated to real estate. You could have allocated to stocks. You could have done a bunch of other stuff, but Bitcoin was the best. On top of that, when you look at it from a safe haven standpoint, there's a bunch of people writing articles, in the first 4, 5, 6 weeks of the Russia-Ukraine conflict, and they're like, Bitcoin hasn't gone up. And you went and you look today, you're like, it's up 30%. Like, what do you mean it didn't go up? And what you find is that they were so used to it trading in a range of about 30% that when it went from the bottom of the range to the top of the range, in their mind, it just oscillates between $35,000, $45,000. but from the day that the invasion occurred until when they would write the article, it was up 25 or 30%. I don't know, do you want to go up to 100% and then you check off like, okay, now it's a safe haven? It's just hard to do because there is no direct definition of what makes it a safe haven asset, right? How do people measure that? And then lastly, I think the correlation, like that's just a math equation. And in short periods of time, we've definitely seen high correlations, but you see that in liquidity crisis, you see that in certain moments where people push out on a risk curve. But over a really, really long period of time, 5, 10 years, correlations are low, Sharpe ratios are high, and Bitcoin tends to be a really good asset to put into a portfolio to have all the impacts that institutional investors want.
Okay, on institutional investors, Michael Saylor borrowed $205 million using his existing stash of Bitcoin as collateral. How significant is this idea of taking out a fiat loan to buy more Bitcoin, using your Bitcoin as collateral at this level with his company?
It's a small loan compared to what he had. He's got $5 or $6 billion of Bitcoin on the balance sheet. I mean, look, Bitcoin is going to become a financialized asset. Whether we like it or not, that's what's going to happen. And so ultimately, people are going to use Bitcoin as collateral to buy their house. They're going to use it to borrow against. They're going to use it to earn yield. They're going to do all the things you can do in the financial system, but they're going to use a digital currency to do it, just like you would use an electronic currency in the legacy world. And so I think that what Michael Saylor has done is absolutely incredible in terms of he essentially broke the seal on a public company using this as a reserve asset. He created a playbook. To his credit, he really understands the Bitcoin ethos. He really understands how to articulate the ideas. And then he has the intellectual humbleness to actually take the playbook and open source it. And he's held multiple events. He's talked to a number of other public company CEOs, and he's gone around the world and he's basically said, here is why I am doing what I'm doing, and here's the playbook, you can do this too. And that's a really powerful thing. And so when I think you look at something like using it as collateral, well, what's the difference of using your computer equipment or using any other asset that would be on your balance sheet to actually go ahead and get some sort of debt financing? It's really not that different. I think what ends up occurring is that people get worked up because he's buying more Bitcoin. So like, oh, he's just levering up. And what you have to remember is that debt is not good or bad, it's how it's used. And so there's plenty of people who take on personal debt. The average credit card balance in America is like $6,000, average interest rate is 18%. Pretty bad debt, not being used correctly. But if you're using it for good purposes and you're actually just getting a long-term loan, you're getting a really attractive interest rate, and you're able to actually go and acquire more of a hard asset, well, it's no different than a real estate investor that says, hey, you know what, I'm gonna put down 10% and use 90% of the bank's money to buy this piece of property, and over a long time, I'm just arbitraging the devaluation of the dollar. That's what Michael Saylor's doing. He's just doing it in a way that people haven't thought about before. Another way to think about it, if you're sitting on Wall Street right now, is Michael Saylor is conducting a leveraged buyout of a minority position in the Bitcoin network. If I say it that way, all of a sudden everyone's like, oh, that's really smart. Like, that's a really fast-growing new product. Like, of course, we all do leveraged buyouts. And some of us get over our skis and do it too much, but like, that's what he's doing. And so I think that the way we describe this stuff is really important, but it takes people with a specific type of experience to describe it that way. You can't be super technical with no Wall Street experience and understand how the Wall Street people talk. You also can't be a finance person and have very little experience with technical things and understand how the developers are going to talk about things. And so we need to have the most kind of diverse thought community as possible and diverse experience, because when you put those people together, what you end up getting is you get the ability to talk to anyone, anywhere in the world and explain this really, really powerful idea. But there's not many things that go from 0 to $1 trillion in 13 years, and Bitcoin's done that. And so I tend to think that the trend is your friend, and things in motion stay in motion.
Michael Saylor, going back to what you were talking about with respect to Bitcoin's rollout in El Salvador, he said that he doesn't think the Bitcoin bond is a good idea. El Salvador recently, said no to IMF money, essentially, or the IMF said no to them, and they're going with this Bitcoin bond instead. Is this a good idea? Is this a bad idea?
I don't know why Michael thinks it's a bad idea. I don't know necessarily why people think it's a good idea, right? I think that you've got to learn a lot more about what they're going to do, and also I think that you've got to understand what the appetite is. And what ends up being really important is I don't necessarily know if the end result is good or bad yet. I think the experimentation is really important. Now, the fact that it's a nation state and not like a two-person startup is different for a lot of people because we're not used to nation states being innovative or experimenting. But I think what we're learning in the Bitcoin community and also in the crypto community even larger is that there's a lot of people experimenting. They're trying to innovate, and you need experimentation to get innovation. And whether it is done on Bitcoin, whether it's something related to Bitcoin, or it's happening somewhere else, the experimentation ends up driving us forward. And so we've seen Bitcoin take a lot of innovation that's happened to other places, bring it to Bitcoin. That's ultimately a good thing in my opinion. And so this is just another example of like, we should encourage the experimentation. If it works, great, we should roll this out globally. If it doesn't work, great, we learned the lesson, it's in a confined situation, and let's go move on to the next idea. So I think the focus on the end result, when the end result is unknown, is really hard to comment on, but the experimentation to me is essential for us to continue to push this whole industry forward.
In the last 2 months, I've been speaking to people on the ground in Ukraine and Russia, understanding use cases for cryptocurrencies and how it can be a powerful tool with respect to bringing your wealth with you, creating a microeconomy with peer-to-peer transactions. But the other side to this that I also find especially interesting is that Russia essentially had its FX reserves weaponized against them.
Yep.
And so had they, had a portion of their wealth stored in Bitcoin, that wouldn't have been possible. And so, I mean, are you, and typically, Alex Gladstein was the person I was chatting with this about, the dictator's dilemma, right? Countries like China and Russia are typically resistant to currencies that they don't control and have any power over. But it also would have been a very useful tool in this kind of context. So do you think that we see countries like Russia and China add Bitcoin to their balance sheet and actually be first movers in the space?
Yeah, so I think there's a couple of pieces. It's obviously a very complex situation. I don't think there is one right answer, and that's why there's so much controversy and debate around it. The first thing is that if you are a country, the number one position to be in globally is to be the producer and distributor of the global reserve currency. That is very clear that is a great position to be in. You win the global game if that gets to be your position. The second best situation to be in is to use the currency that nobody controls. And so ultimately what I think a lot of people around the world have said is, well, the second best solution for us, or next best thing to actually being the owner of the global reserve currency, is to use our own currency. But I think that now we're starting to realize like that may not be the second best position. And so Bitcoin I don't think is going to leapfrog the global reserve currency in the short term in terms of all of a sudden people are going to say I control Bitcoin and now it's the global reserve currency and so I get to replace the US dollar or anything else. Instead what I think people are going to realize is if I don't control the global reserve currency, the next best thing is this censorship resistant thing that nobody controls. So I think that's one big important point. The second thing is, again, when we talk about sanctions, it's a very specific term that's used, and I can't remember who the comedian is, but there's this great stand-up segment where they talk about insurgents. And so when the United States went to war in the early 2000s, we said, hey, we're going to take on the insurgency, we're going to kill the insurgents. And Americans all around said, I'm not an insurgent, I don't know any insurgents, kill them all. And it was this weird marketing term that ended up dehumanizing what was happening. And again, war is necessary at some point, but in this situation, it completely masked the whole idea of who are we fighting, right? And so I think that sanctions are very similar. If we say, hey, we're going to sanction a country, a lot of people say, I'm not getting sanctioned, sanction them, right? They're bad people, whatever. I disagree with them. When all of a sudden you say we're going to cut 150 million Russians off of the global financial system, and they're literally going to have their currency destroyed, they're all going to have their businesses go out of business, and they're not going to be able to conduct transactions, and they're literally maybe people who end up getting put into poverty and all this stuff, I think there's a lot more people like, I'd like to know more about this situation before we do that. And so, again, I don't know what the right answer is, right? But what I do know is that the idea that we are going to sanction a country and it is going to simply hurt the politicians or the leaders and it's not going to have an impact on the citizens, I think most people agree, like, that's not how this works. The idea is we sanction them and we apply enough pressure to the citizenry that they affect change within their own country. Along the way, there's a lot of people get hurt there. And so I don't know what the right answer is, but what I do think is that the entire global kind of community woke up to the fact that something that used to be sacred in terms of your FX reserves or your central bank reserves, that is no longer off limits.
Yeah.
And so now, if you're a country who says, I'm cool with the United States or I'm cool with another country, but am I always going to be cool with them? I think so. Am I willing to bet my central bank reserves on the fact that I'm always going to be cool with them? And some countries will for sure say that, right? Other countries are going to be like, maybe I'm on the fringe of being cool with them, and maybe we should look at alternatives. And so I think this is a natural thing that occurs, is whenever you start to exhibit force, or you start to exhibit kind of an aggressiveness or abrasiveness, what you get is other people say, well, if they're coming for them, maybe one day they'll come for me. What's our plan? And so I don't know exactly what countries will do. Bitcoin's still pretty small for the global stage, only $1 trillion or so. And so can a country go and replace all of its central bank reserves with Bitcoin? Probably not, right? There's not enough free float and those types of things. But will they put 5%? And they'll have gold, and they'll have dollars, and they'll have, maybe the euro, and then they'll have some other assets, and they'll have 5% Bitcoin? I think that that's becoming more of a possibility as they look around and they say there's an economic argument, there's a sovereignty argument, and many other arguments that may make it attractive for these countries to go ahead and become more friendly towards Bitcoin.
You said that Bitcoin isn't going to leapfrog and become the global reserve currency, but could it?
Anything's possible.
Is this what a lot of people here believe, that Bitcoin will become the world's reserve currency? But is that realistic? With a limited, supply, would that ever be possible?
It's definitely possible, right? I think that it's much easier to see kind of 5 years out than it is 50 years out. And what we do know is that currencies have a history of succeeding, thriving, and then failing. And that's happened over and over for thousands of years of history. And so I think that the easier thing is, will the US dollar remain the global reserve currency for the next 1,000 years? I think most people would say probably not. And that's not because you're anti-dollar or anti-American. It's just that you're looking at the math and you're looking at history and you're saying, these things don't last forever. And so then the question becomes okay, if at some point the dollar falls out of favor, what is likely to replace it? Well, you basically have two options: another country's currency, or a currency that's not, controlled by anybody, or not a nation-state currency. So basically at that point, you got a 50-50 in terms of options, and then you start to assign probability to each one of them occurring. And what I find so fascinating is that the world likes to think in black and white. It's either yes it will, or no it won't. And the truth is, it's probably some percentage chance that it'll happen, and that percentage is higher than it was 5 years ago, which was higher than it was 5 years before that. And if we wait another 5, 10, 15 years, the percentage chance is probably going to be higher and higher. And so some of that is demographics. People have seen Bitcoin around for a long time, Lindy effect. You have young people who now are kind of in positions of power and influence. Some of that is just that literally Bitcoin is a more liquid asset, it's larger, it's used by more people. And some of that is just the really bad other options become obvious, and so there's just by attrition, it becomes the option. And so if I had to assign a probability today, I don't know, 20%? At some point in the future, long after I'm dead, that Bitcoin's the global reserve currency. Sure, but that's kind of a cop-out answer, right? Because it's not a yes or no. And so I think that what really scares some countries is that they don't know what the probability is. They haven't done the work yet. And so if you're the United States, my overarching message for years now, all the way going back to 2018, has been we absolutely should look at the US dollar should remain the global reserve currency for as long as we possibly can if we want to be positive towards the state of America on the global stage. We also should be prepared for a world where the US dollar is not the global reserve currency. And the second best thing for us to do is to go start participating in the Bitcoin community today. We should be mining, we should be acquiring Bitcoin, we should be educating people, we should be handing digital wallets to people, and we should be preparing for that world. And if we have a dual strategy, we will be right. Whether it's the dollar or it's Bitcoin, we're right. So we don't need to play this game of man, I really hope my politician is a good gambler, right? Just do both, and they're not going to actually be competitive with each other. What's likely to happen, like we're seeing with Terra and Do Kwon, is he's actually pegging his dollar-denominated stablecoin to Bitcoin, or he's backing it with the reserves. The same way Michael Saylor created the corporate playbook to go and put Bitcoin on your balance sheet, I believe Do Kwon is creating the central bank playbook for stablecoins and central bank currencies to go ahead and put Bitcoin in their reserves and say, I can have a dollar that I have some sort of control over, but it is backed by the hardest, soundest money in the world. And that's a really, really compelling example of what I think central banks are going to wake up and say, oh, we don't have to give up 100% control, and we can benefit from this new thing, but we can still participate in the market so we feel like we have some control.
In the last year, there's been a lot of talk on Capitol Hill, also in the most recent executive order from President Biden, about central bank digital currencies in the US starting its own. Do we need one?
Well, I don't know if it's do we need it or do we not. It's obvious that the market wants digital stablecoins, right? I think it's $250 billion of digital stablecoins now. If you put it in kind of the top 2 or 3, it's about 180 billion or so concentrated in those. And so it's very obvious that people want these. They find them valuable. Regardless of what they're doing with it, the market has spoken and said there is value to these digital stablecoins. The question becomes, who should create them? What should those people be allowed to access? When you start to think of the positives, if you go back to the pandemic when they wanted to go ahead and issue all of the stimulus payments, they sent physical checks. Sounds kind of antiquated. And so if there had been a digital currency, they could press a button and immediately deposit it in all these people's accounts. That would have been a pretty powerful thing. At the same time, there's trade-offs. It's not black and white. And so if all of a sudden we said, hey, in certain situations, the government will be able to hand out money faster, but we're going to give up our financial privacy. We're going to actually increase the surveillance capabilities. We're going to introduce things like personalized monetary policy, where you get a high inflation rate, I don't. You get a high interest rate, I don't. Or we're going to start to actually have expiration of money, where they hand you the money and it goes away in 2 weeks, 3 weeks, 4 weeks. People will start to say, oh, that's that conspiracy theory talk from the internet. But we already have it in the United States. If you look, EBT cards, if you don't use it in 12 months, it's gone. And so ultimately, I think that when you start to use certain technologies, this idea of personalized monetary policy is a theme that people aren't talking about today. It's probably one of the scariest things in finance, because if you hand people the tools to do it, they're going to do it. Everything in your life is personalized. Your music playlist, your directions in Google Maps, your search results, every single thing is personalized. If you give central banks the ability to personalize monetary policy, they are going to say, thank you so much, how do we get started? And I think that the way it will be presented is we want to actually spur economic activity. We want to spur velocity of money. We want to have all these good intentions. But the downsides, I think, drastically outweigh the positives, and I think we've got to be very, very careful here. And so in some way, if the market's spoken, it's already adopted an asset, why not just use the ones that are already in the market? Why do we need to hand over more and more control, more and more information? It begs the question. I don't have the answer, but I do think that that is something that they're going to have to look at and say, if the private market's already been successful doing this, do we really want to compete with our private companies? And I don't think that that's a clear answer.
So what can young people do?
Look, I think there's a lot of young people who are very interested in cryptocurrencies in general, right? And Bitcoin is kind of that insertion point into the industry. And what I tell all of them is stop, think, and learn. Before you go and you start spending money all these different places, or think that you're going to become, some great entrepreneur or something, you may do that. But learning is so important. And I think what we've seen is that Bitcoin is a great teacher. It teaches you everything from economics to computer science to security, open source software, all these different things. And if you're a young person today, I always say, think like an investor. You are going to make an investment of the single most important asset you have. You don't have a lot of money, but you have time. And if you have time and you're going to invest it in something, think like an investor. And that time investment in Bitcoin is likely to be a great investment because you have intellectual capital flowing into the space, you have financial capital flowing into the space, and what we've seen is that the growth rates of these are very attractive. And so I think that that's just a huge piece across America and globally, is we need as many of our young people who are talented to come into the industry, learn, and then turn around and ask, what can I do to help push this forward? And the more people we get asking that question and acting on it, I think the better off we'll be over the long term.